All right. So is Bitcoin going to go to $109,000? Could it go to $105,500 after that? I absolutely think it could. And I'm going to give you the reasoning and basis behind it. Now, does that mean that's going to happen today? No, it does not. So don't lose your marbles whenever I say that, right? Secondarily, there's a lot of liquidity here to the downside that needs to be taken, and there's not a lot on the upside. And I'll show that to you graphically, like on the charts here in just a second. This $116,000 level, it was a key level, and it's something we've been talking about for weeks and weeks and weeks inside of not only Nordic Alpha, but also on my channel here, right? On these streams. So what you have to understand is that if you remember, if you've been watching me for long enough, even if you've only been watching me for like a week or two, right? I don't know how long people have been watching for. Even if you've only been watching me for a couple of weeks, you remember the massive trade that we just took. We only put $1,000 on the line, but we made $2,000 in one day, 24 hours, right? I gave that trade out live on this stream. Not this particular stream, but on my streams on this channel, right? Secondarily, I gave that trade out weeks and weeks and weeks in advance inside of Nordic Alpha, the private VIP trading room. I give lots of trades out in there. I gave out a silver trade that is up massively last week inside of Nordic Alpha that hit on Sunday and in one day is up like 4 or 5%. Something like that, maybe 10%. I don't know. I'll show it to you. We're hitting a level here at the 115 to 116-ish range. Very pivotal. 114,750. You have to keep that. Keep it on your mind, okay? Because this is not just going to affect BTC. Okay, this is going to affect your moon bags. This is going to affect Paul Grazi's Toshis of the world, right? All of your moon bags, your altcoins and things of that sort could potentially be affected by this one level on Bitcoin, okay? So just make sure that you pay attention to this level. Now let's get into the charts. I'll show you what I'm talking about. Bang. Let me see if I can put my, what's it called? My, no, I can't put the feel-good techno on because if I put the feel-good techno music on, my shit gets demonetized. It's stupid. I hate it. So right now what you're seeing is the range after the Trump dump, right? We remember the Trump tariff dump, right? This is the low. This is now the new high. This was the previous high right here, right? This used to be the high. But obviously, we just cracked that. And if you zoom in before we do anything, we swing failure patterned that high. And that swing failure pattern is confirmed not only on the 1 hour, but also on the 4 hour, on the 8 hour, on the 12 hour, and it could be confirming on the daily, so long as we close below 116. Okay, so let's go back to the 1 hour chart. This is your range now, right? This means overvalued, this blue box up to the white line, right? This means mid value, right? This is your equilibrium price, the 0.5, right? And then this means undervalued. You wonder why we bounced down there? Well, look, you wonder why we bounced down there? Look at it. Bottoming tail candle, came in, boom, bounced, refilled out the entire range. Refilled the entire range and then some, right? So if we start ranging here, you could see a full deviation or at least a partial deviation to refill out this range, okay? Now, if you want to know, let me show you something. Has any of that been mitigated yet? No, it has not. What about this? Damn, Daniel, back at it again. What about that? Has that liquidity curve been mitigated? Look to your right. It absolutely has. With all of this right here got taken out, right? All of that right there, it all got taken out if you just look to the right, right? So that is the unfortunate side effect of ranges, is a lot of times the majority of the liquidity of those ranges gets taken out. This is all that's left from this side, right? From this side, from this right here, this is all that's left. They left that. They're fine with that. They're okay with that because the institutions, they'll just bring it back down here, grab more liquidity, fill more orders, and rip it back up again, right? You got to remember that institutions don't just get their orders filled in one rip, right? And that's why we see a lot of ranges. If you had $20 billion worth of orders that you need to get filled to go long on Bitcoin before it rips back up to these all-time highs up here, and this nice little liquidity curve, right, that has not been even close to mitigated yet. Before you rip it back up here, what do you want to do, right? Well, you want to get as much money in before you take it up here to maximize your profit. It's just what it is. It's just market structure 101. It's smart money concepts 101, actually. So when you have a massive, massive liquidity curve like this with no mitigation, and then let me let you in on a little secret, you also have a naked daily point of control down here, right around 105.5, 105.2. You have a naked point of control and a naked VWAP right here at 109.5. And then you also have the naked VWAP down here at 113.5, 113.3. What do you think is more likely? Do you come up here, right? Or do you come back down here, right? Leaving all of this liquidity, right? Because now that you've mitigated all this, right? And even through here, you mitigated all of this, right? Except for this right here. Just look right, right? This is all that you didn't mitigate there. And that was just a massive dump down. Do you continue ripping it, or do you say, hey, you know, we're going to rip this back down? That's where you have to decide. And you have to say, well, you know, I'm not 100% certain, Drew. I'm not 100% certain on that. What do you think, Drew? And that's where I say probabilities are that since you deviated outside of this zone, that you come back down here and take liquidity before you move up, right? Because you've already taken a bunch of liquidity on the move up. So what do? You take more liquidity to go grab more, right? Up here. And that liquidity is this type of stuff right here. The 106 long on BTC right down here, right? The Paul Grazi's of the world. That's who they're trying to go and find, right? And Paul, you've got your trailing stop, and I think that's an incredibly smart risk management play. You have to have that trailing stop because you already know what time it is. So now let me show you the level that matters, okay? Because there is a level that matters. Now, first and foremost, we came up here. Well, let's talk about this first, right? So how much potential liquidity is up here compared to how much liquidity is down here in this range? Probably not as much, to be honest with you. Probably not as much. There's going to be liquidity here, 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 and here. But here, there's going to be liquidity all the way down here, 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 and here, right? That's where all your stops are going to be for the people that were getting in, right? That's what it is. Now, if we There was something that I wanted to do up here with this range. Oh, I know what I wanted to do. We're going to the 30-minute chart really quick, everyone. Let me zoom in here on this range only. Okay. I only want this. Now, if we pull up what's called the SVP, which is the session volume profile, you can see where the unmitigated supply is, right? So this has already been mitigated, right? This is the naked, this was a naked point of control. They ripped it right to it, ripped it right to it, ripped it right to it. And this is the only point of control that is still left, right? So let's go ahead and lock that one in. Where's my naked POCs? Right here. So you've got a naked point of control up here at about 121, right? Every other point of control, it has been 100% taken and mitigated, all right? So call it 121-ish, something like that, just to be safe. And secondarily, the other thing I would want to see is VWAP, okay? So let's look at the VWAP sessions and see if anything is unmitigated as it sits. We're going to turn SVP off, though. So here's your reset on VWAP, got hit. Let's see. Here's your reset on VWAP, pulled up, got hit, right? Here's your reset, pulled up, got hit. Here's your reset. Let's see. Where's your reset this day? One. Yep, this one got hit. And then let's go here. Here's your reset on VWAP, got hit. So there's literally no naked VWAPs up here, and there's one naked point of control. And then if you come over here, you zoom out just a little bit, right? What is this level? Oh, that's the fair value gap fill. You have one naked VWAP, two naked VWAPs, one naked point of control, two naked point of controls. Just keep scrolling down. Where's the 105 level? Yep. So you've got three naked points of control and two naked VWAPs here in this range, right? Dude and dudettes, homies and homettes, and non-binary people alike. The probabilities are more likely that you come down here, okay, than to come up here. There's way less liquidity up here than there is down here, right? So what do institutions want to do? They want to fill their orders with liquidity. They don't hunt liquidity like, oh, we're hunting liquidity because that's where we make money. No, it's not. They hunt liquidity so that they can fill their orders and then rip it to the upside where they can actually make money. They don't make, I mean, they make peanuts, they make crumbs. When they stop you out of your trades, there's this one just misconception inside of the markets, right? And this is I want to go full cam. There's this misconception in the markets that like institutions are out here trying to stop hunt us. They're not, dude. They don't care about my $2,000 position. They don't care about your $2,000 position. Spoiler, they don't care about your $2 million position, okay? What do they care about? What I was just saying. They care about filling their $2 billion position. That's what they care about. They don't give a crap about your $2,000 position. They don't. And it's a hard fact that people need to realize, because I know it's really easy, especially when you take losses, to be like, oh, there was just the institutions, market manipulation, trying to stop hunt me. No, they weren't. They don't give a shit. They don't care. They just want to fill their orders and then bring it down and then fill more orders and bring it down and fill more orders and then rip it all the way back up here where they actually make money. They don't make money here. Well, they make money, but not much. They don't make money here. They don't make money here. They make money when they rip it back up because they've got a $2 billion position that they built. How? How did they build it? By taking out all of these stops and being the opposite side of those stops, right? And then ripping it down here and blasting it up. That's how institutions make money. That's how smart money makes money. Okay, they're not like, oh, your $7,000 100x leverage trade, I'm going to take that out. No, they're not. They don't care. They're going to take it out, yes, but it has nothing to do with you. It has nothing to do with you. It has everything to do with them taking price down to a level that they are okay buying at, or taking price up to a level that they are okay selling at to rip it back down, okay? Now, let's talk about the other stuff. So this is something that I've been talking about for like weeks, okay? And it's this bad boy right here. Rising wedge and an upward trend line that we've been respecting very well. As it sits right now, if we were to tank to this level today, so long as we stayed above $93,000, we're still bullish, right? If we do it, by the end of the month, $93K. So what's happening? We're back testing that level right now. $92,000 to $94,000. There's a gap. Yeah, you talking about right here? Yeah, technically we've got a lot of liquidity here too. Let's just call it what it is. Let me show you. This is your liquidity curve, right? That's it. That's it. So what does that mean? Well, you've got stops here, you've got stops here, you've got stops here, and then you've got stops here. You've even got stops here to a certain extent, right? But they took those out. So, there is a lot of liquidity down here. And again, how much liquidity is up here? From a daily perspective, not a lot comparatively. Okay. Okay. Now, let's talk about what we can do. So if you've been here for the past couple of weeks, you know about this trade. This is the trade where we took down 2K in a day. I didn't mean to rhyme, but it rhymes. 2K in a day, we did it right here. All we did was enter right here on this candle, right? Bang, the back test. We shorted it all the way down here to about 109, okay? It was a great trade. It was awesome, whatever. Now, this level right now is at about 104,750, okay? So if we get a topping tail candle here, a swing failure pattern on the daily chart, and we close below this level, say 114.8-ish, right? That's all we need to say, hey, we can double up on that trade. Not what I meant to do. That's where you can start thinking about, hey, do we double up on this trade and take it down to 105.3, or at the very least, take it down to here, right? 109.5. 3 extras to reward, worst case scenario. That's if you set your stop loss out super tight here or super loose here. If you set your stop loss not so loose, you got a 16 extras to reward ratio. So, I mean, do whatever you want to do, whatever your trading style is, right? But I'm not going to tell you what to do. I'm going to tell you this is a level. This is the level for sure, where you need to start thinking about, like, if we start closing above this level, and you don't want to see an SFP here. You want to see a close above 116 here today, and then bang, back test, blast off. That's where you can start targeting these highs, and ultimately the fair value gap fill, right? The fair value gap fill, where's that at? It's like right here. Yeah. At 119.2. Okay. So that's what I would be looking at. Here's your long, right? You could look to long it all the way up to there, or you could go with the fair value gap fill right there, and you've still got a 4x risk to reward ratio. Best case scenario, 10x risk to reward ratio, right? That's assuming you don't set your stop tighter, like, which should be about right there, right? You got a 20x risk to reward on this. I mean, I don't know anybody that's going to be like, nah, I don't want a 20x risk to reward. Screw you, Drew, right? You're an idiot. You suck. You have an 88% win rate, but you suck. Let's go over here to silver really quick. We're talking about, this is in Nordic Alpha, and this is what I was talking about last week. And I gave this trade out, I believe it was on Friday. And I said, look, we've got an ascending triangle here. If we don't break out above it, which it doesn't look like we're going to, because we've broken down below it, we got back into it, we set a lower high. If we break down from this, we get a bearish back test of the point of control. We get a bearish back test here, right? As you can see, that's exactly what you got. So first and foremost, here, I'll show you. Here's your breakdown from the point of control, and obviously the ascending triangle. Here's your confirmation candle that confirms the breakdown candle, right? Technically, this was your confirmation candle, but it wasn't a very strong confirmation candle, and I don't think it actually confirmed. What's the close? 48.489. What's the low on this, or the close on this? 48.485. Yeah, so you actually closed 0.4 cents higher than what you needed to confirm this move. So this is your confirmation. This is your back test. This is your short, right? Bang. And look at that. You took it almost to your full take profit. Boom, front ran it by 7 cents. Absolutely insane trade. Massive risk to reward on that. Whoever took that trade inside of Nordic Alpha made a bunch of money. Now we're talking gold. Gold has to stay above $4,000 to $4,007 for us to see, you know, if we're going to continue going up. Now, if we confirm below this level, we could be going down, especially if we don't get a swing failure pattern of this low, right? Which is the 4-hour low. And as it sits right now, we've got 1 hour and 33 minutes to confirm this swing failure pattern, but we're not swing failing right now. Right now, we have a confirmed non-swing failure pattern on the 1-hour chart, a confirmed non-swing failure pattern on the 2-hour chart, and we are a non-swing failure confirmation on the 3-hour chart. So now we need to see what happens at the 4-hour chart. Do we get the non-confirmation? If so, we get a back test of this line. You got to start thinking about shorts. Okay, that's what's going on inside of gold and silver right now, and how you could have taken advantage of that if you were inside of the Nordic Alpha private VIP trading room, where I gave that trade out Friday. And if you don't believe me, that's perfectly fine. You don't have to believe me on stuff like this. Just saying. Does that look like the trade that I was just talking about? I'm just saying we give this out in advance. We give this out in real time inside of the VIP trading room. You're either in it or you're not, man. You're either getting money or you're not, man. I don't know what to tell you if you're not. Do whatever you want to do. Here's Bitcoin. Let's talk about some altcoins if you'd like me to. Is there anything that anybody would like me to look at? I see Van Herk wants Jupiter, and we can absolutely do that. We can absolutely do that. I would like to go down to the 1 hour or 1 minute chart really quick on. Oop, we got VWAP. We reclaimed VWAP, bruh. See what happens here. Let's see what happens here. Yeah. Yeah, I mean, you reclaimed VWAP. That's good news. For bullish upward momentum, but like ultimately, it doesn't mean anything because at the end of the day, on the daily chart, if you SFP up here, like you got to close above 116. You got to close above 115,950. Otherwise, it's a confirmed SFP. Now, if you close more down here towards 114,850, that's where it gets real nasty. So you have a confirmed topping tail candle here at a new high, right? And it favors a pullback and a breakdown from larger charting patterns, right? Larger charting patterns. Right? Now, we still haven't gotten our back test of this. I mean, technically, you kind of tried to here, but then you just blasted through. What does back test mean? Back test means you don't close a candle back above that level. So again, we don't have it. We don't have it yet. Where's it at? Move my water out of the way so I can see. 110.2. I mean, you got to get pretty far down here. And there's a possibility that you don't go down there and even get a confirmation here. There's a possibility that you roll over a little bit. You get an SFP of that, or not an SFP, but you get a candle. Yeah, no, you get an SFP of this low right here, the low of this daily candle. And then you hit the value area, or not the value area, the naked point of control and naked VWAP, and then you pump back up, right? So there's a possibility that this just never even comes into play. And I think it's a higher possibility that that happens because it's all part of a larger charting pattern in any case, which is this bad boy, the 1 day rising wedge, right? So, I mean, do with that information whatever you want, but let's go look at Jupiter real quick. I mean, these trumpety dumpety candles are really going to mess up your TA, like everywhere, right? So, I mean, I'm going to be honest with you, man, this thing looks murdered. You're reaching, like you got to get this level and you're at it right now, right? You got to get that level. As you can see, it used to be support, then support, then it broke down. Kind of been bing bonging, then it flipped it to again, support again, then support again. Now it's resistance. Okay, so this level is going to be extremely critical right here, right? This literally 44.5 cent level is going to be critical on Jupiter, man. You got to see what happens at this level. As it sits right now, from a market structure perspective, anything above $31.58 or 31 cents, 0.58 is actually bullish. because this is your prior low, right? So I'll show you what I mean by that. Here's your low. Here's your next high. Here's your next low. Here's your next high. Upward market structure, right? I would say you're probably going to be coming back down here to about 41 cents if you come down, right? I'm not saying that you're guaranteed to come down, but this would be your first level of support where you could start thinking about adding to your bags. And then your ultimate level is going to be right down here at about, what's that, 33 cents. And that's where you can start really thinking about adding to your bags, okay? Now, I'm just going to be honest with you, dude, this chart sucks. This chart sucks. So what I would be looking to do is pull a fib from the high after that big random dump, right? Which is boom, right? That big dump. And then what's your subsequent high and low after that? Because from a broader perspective, boom, 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 right? Oh, you bought it at 32 cents. Now you're doing all right, bro. I would set your stop loss under these lows then. Yeah, you're right there. You almost bought the bottom of this nice little move right here, right? So what I would be looking to do is this. You're about to reach resistance here at about 46 bucks, or it's not bucks, 46.28 cents. You're going to reach resistance here at the 0.618. This is a really good place to start thinking about taking profits and entering shorts. Now, you got to watch what happens with Bitcoin here. I'm not going to sit here and act like if Bitcoin starts pumping, you can't get through this 0.618. Then you would be looking to about 56 cents for your next resistance zone, which is the 0.786 fib. But the 0.382, that's your support, man. And like these fibs, they don't lie. They really don't. And you're watching it in real time. Like you're literally watching it in real time. What happened? Immediate equilibrium retrace. After the big move down, right, from the peak to the trough, the valley, you had an immediate back to equilibrium, which is the 0.5, right? Then you went down to the 0.382, double bounced off of it, boom, blasted up to the 0.618, right? Exactly. Yeah. Rising tides lift all boats, man. So if Bitcoin is going up, most likely the altcoins are going to go up as well in the same time frame. Okay? Maybe not quite the same time frame, but you get where I'm going with it. Like altcoins can lag a little bit. But what I'm seeing on Jupiter, and again, this is something I teach inside of my training, which is called the Foundation. You can go and get it on drewwolfer.com website. You can go check it out. And in case you happen to give an F, it's not expensive at all. It's actually really, really inexpensive for what is inside of it and comparatively to what everyone else charges for trainings. Why? Because I actually trade and I actually make money off of it. So I don't need to charge $10,000 for a friggin' program or $100,000 or $1,000 for a program because I don't need that to be my main means of income. So if you want to go and get the high level overview and understand exactly how to trade Fibonacci's, go get inside of the Foundation or get into the private VIP trading room where I literally give out free trainings on that. There's a free little mini course inside of the VIP trading room that's got like 28 episodes in it. Do whatever you want to do, man. It's 29 bucks to get in the VIP trading room. Still waiting. Still waiting on Solana. We need to see that 0.618 retrace, man. And we need to see it hit right here at this level. And you get a nice rejection. You're shorting it back down to the 0.5. And then you can start thinking about longs, right? Solana is still the same. As it sits right now, I'm still bearish. Not bearish, but I'm bearish once we get up to the 0.618 at about 218 for a nice pullback to then start going long. But as it sits right now, there is the potential that this happens because from a market structure perspective, you're going down here. Swing high, swing low, lower swing high, lower swing low, lower swing high, same swing low. You're starting to get your market structure shift here. Boom, right, and bang. But until you take out this high, none of this other stuff matters, or until you take out this low, right? You can't set a new high or low in market structure, right? So as we see right now, yeah, this is all chop though, right? This is all chop because you got to take out either. This is all that matters right here, right? I can tell you actually. It's where you took it out. Yeah, this is all that matters is this range right here. From 173 to $235. It's a $60 range. That's all that matters. What happens inside of here is irrelevant. What really matters is what happens when you break that or when you break this, which is why we have this short here saying, hey, you got to start thinking about shorts here if you get below this and you back test it, right? Because that's a market structure shift, or not a market structure shift. It's a break of structure to the downside for the continuation downwards. Secondarily, if you get above this, that's where we got to start thinking about a retrace to the 0.618 and a long. So the trades are still the same on Solana. Don't get lost in the sauce. Like what's John? John's the other trader that is actually, he was on, you saw him sitting on the couch in my last stream on Friday. What he always says, and I think it's funny, don't fiddle in the middle. He always says, don't fiddle in the middle, right? So you don't fiddle in the middle of ranges. And that's exactly where we're at. From here to here, we are fiddling in the middle right now, right? Now, you haven't taken anything out as it sits right now. And this range is massive. So until you get up here, you can't start thinking about shorts or longs. Once you reclaim it and you start bouncing, that's where you can start thinking about longs. But if you get up here, you get a rejection, you got to start shorting, right? And you're shorting probably down to even here, potentially, right? But definitely to the 0.5. So, I mean, in my opinion, $219 is going to be a pretty key level. High leverage cross. I don't do cross. I only do isolated. Yeah, a grid bot could potentially do okay in this kind of chop range, but it can also get chopped up. So you got to really set your parameters when you're talking bots, man. You got to really set your parameters when you're talking about bots. And I know for 100% certainty, John, he scalps all day inside of the Discord. A lot of times I don't scalp as much because I'm busy. I'm doing all of these things. I'm doing the streams. I'm, building the business. Doing all the videos, doing all the trainings. I'm doing all the videos inside of the Discord, stuff like that. John scalps a lot, JP trades. So, yeah. You're absolutely right. You do have to babysit people a lot. They think there's no work. Yeah, this is a lot of work, man. And you got to learn it over like a period of a lot of years. And that's why I'm here, though. And that's what I try to tell people. I'm not here to tell you like, hey, you should long or short at this level. Although I do that to a certain extent, right? I tell people, I give out, trade calls and levels and stuff like that, and trade theses and ideas. But I'm more or less here to cut your learning curve on how to become a pro trader. And what do I mean by a pro trader? I don't mean you have to be like a pro trader like me, where you're like a verified pro trader and do all the things that I do with Nordic Alpha and verified investing. I mean like professional trader, as in that's like your living. You make your living doing that. That's what I'm here for, is to cut your learning curve into being able to do that. Because it took me 10 years of doing it and learning it, not all by myself, but kind of on an island by myself. When I was learning, this was more, there was way less trading gurus in the world, right? And honestly, I think that was better because there was way less people to lead you down the wrong path back then, okay? Which is why I'm probably in the position that I am. Because if there were all those trading gurus, you know, all the douchebags that are like, oh, I'm going to freaking scalp Forex and here's an inversion fair value gap and blah, 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 blah. Like all those idiots. Dude, I probably would have quit the markets like a lot of people do nowadays. So I try to stop that from happening for people, right? That's essentially what it comes down to. Because I actually am in the markets. I actually have a documented live proven win rate. And that's that. Here's something that's not, people aren't going to like. People aren't going to like this at all. We're reaching the value area high of this. And every time we deviate from this, we come right back to it. Bang, 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 bang. Now, do we get a rejection here? I don't know. I mean, this is going to be determined upon Bitcoin, right? What Bitcoin does here. Let's pull up BTC and let's put them side by side. I don't want to do the dual chart layout BS. I just want to do BTC USDT on Bybit perpetuals. Yeah, so 115,456 right now. Yeah. So this right here, whether or not this happens, is going to be determined upon what Bitcoin does here. If Bitcoin decides to pump, great. If it doesn't, whatever. Here's your upper target, right? It's right around $4,600. You got to think about a short there. You have to start thinking about a short there. Maybe even 4,500, right? 4,550-ish, okay? Now, if you break down from this is extremely bad news. This nullifies the entire upward trajectory of 2025. This is where it gets nasty for ETH, and you're definitely going to start coming down here, probably to this $2,500 level. You might not make it that far, but you kind of understand where I'm going with it, right? First stop right there, second stop right here, third stop right here, right? So there's going to be levels and naked points of control and naked VWAPs down there that you can trade against and you can trade up to, but we'll see what happens, man. I mean, this is overarching analysis on what is the broader context of the market. And as it sits, the broader context of the market is sideways chop, man. It's non-directional right now, right? And if you want to get real technical with it, swing high, swing high, swing high, swing high, swing low, swing low, swing low, right? Swing high, swing low, swing high, swing low, swing high, swing low, lower swing high, lower swing low, lower swing high, or same swing high, lower swing low, downtrend. Downtrend right now on ETH. It's more bearish leaning than it is bullish right now. And it's not because I'm like, I'm bearish on ETH. For God's sakes, I'm the CEO of Wolfer friggin' Finance. We run 4 ETH validator nodes. We have over 125 ETH in our wallet. I don't want to be bearish on ETH. I'm just telling you that from an overarching perspective, what it looks like right now, this is leaning more bearish, right? It's not because I'm like, I want to be bearish. I'm just not, Yeah, dude. Yeah. Look at these gaps. Bang, 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 bang. No liquidity. Well, a shit ton of liquidity, but no liquidity taken. Like, you have a massive gap essentially from here to here. Huge, huge, huge imbalance. Even here, actually. I mean, this is your imbalance zone. Let's just mark that out. And I know it sucks because it's like a massive deviation and imbalance zone, but I mean, you got to call it what it is, man. You got to call it what it is. Call me what you want, but don't call me for fronts. Hey, that's your kind of like, dude, let's call it what it is. That's your value zone that we're going to want to come back down to before we start moving up. This is where the institutions can get big, big, big orders. Big orders filled before they move it upwards. So, I mean, as it sits right now, what's the move? Well, it's if we SFP down here and get into this deviation zone, you can start longing back up to here, right? You can also short, well, did we get that? Yeah, we did get our market structure shift break up, right? And you got to see what happens here, right? Now, obviously, we didn't get that trade, but you kind of see where I'm going with it, right? This was a market structure shift upward, a new high, no SFP or bear div, value area high in previous swing high as support. So this is what you would like to see, right? You want to see a new high come up here. We still haven't gotten it, but you would like to see this, right? Boom, 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 new high as support, bang. That's a short-term market structure shift to the upside, right? So we'll call it what it is. Now, secondarily, if you lose this level, this is not good. This is not good, right? And then you've got your last ditch. And again, you got to lose it, get a confirmation candle, bearish back test, and then you're shorting. You're not just shorting because you go under this level a little bit, right? You can always wick out down to that level. Yeah. I agree, man. It's an unfortunate fact, but I do agree with that. I don't think that many altcoins are going to do much until Ethereum makes its move past its all-time high. It's got to get above 5K. Take a high leverage long trade on Ethereum. Yeah. I mean, that could make it dump, you know. But again, you know, you'd have to do that with you'd have to be like the Baron Trump whale dude that like takes the $300 million longs. You'd have to be something like that. Does anybody in here know what's up with that wallet right now? That wallet that is like 100% win rate. It's been taking massive longs and shorts, leveraged positions, 100% or 100x or $100 million plus. Does anybody know what's going on with that wallet? Is it long or short? I know the last thing that I knew, it was long, and then I would assume that they are closed out of their position now at a substantial profit. But I would like to know if anybody knows what that level or what that whale is doing right now. Does anybody else have anything that they want me to look at? Let me see if I can. I'm going to go over to the Twitter really quick. Where's my Twitter? Oh, it's x.com now. I still call it Twitter. I will always call it Twitter. I look at x.com and Twitter's name change the same way that I looked at the Sears Tower in Chicago, because I'm from Chicago, whenever they sold that. Now it's called the Willis Tower. No one in Chicago calls it the Willis Tower. Everyone in Chicago calls it the Sears Tower. And if you call it the Willis Tower, we all know you ain't from Chicago, buddy. So yeah, anyways, we don't have any comments on this. That's fine. Okay, cool. Boom, 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 boom. Yep, that's fine. Trading view. Okay, do you guys want me to just cook for the next 9 minutes and see what we can find? Let's do, because I gotta appreciate you, man. Toshi. Did we do Toshi on Coinbase? Do you remember? It was Coinbase. Okay, we gotta star this really quick so that we know when to come back for Toshi. For Paul Grazzi. Paul Grazzi said, I want that Toshi, man. I want that uptrend. Uptrend. Toshi's in the uptrend, man. Yeah. I mean, once you get up here, this is where you start to think about dumps, right? You get up here, this is where you start to think about dumps. I mean, ultimately, dude, your profit target is 11/100ths of a cent, right? Or 0.00115, right? Right here. This is your ultimate target, right? But what I will say is that if you get up here, Paul, in this range at all, right? Or you swing fail right here, you got to get out and just wait for the pullback and the continuation in market structure to the upside, right? Here's your low, high, low, high, low, higher high, higher low, higher high. And this is going to be the low that matters all the way down here. You have a really, really far way that you could fall here. So I would just be trailing right here. I would not let it go below this level. I would not let it go below this level. But you're already in, bro. You're already in. Yeah, 0.00069. Yeah, so I mean, your worst case scenario is like break even. You know what I'm saying? Like you get below the 0.5 equilibrium level because you just got above it, which is bullish, right? Notice how these things leg up and down. Leg up, leg up, leg up, right? And then boom, all the way up to the, premium or the overvalued area. Comes back down to equilibrium, bounces, right? Loses it right here. Tries to revisit it, comes down into the discount section, right? This is premium, this is discount, and then bounces right back to equilibrium. Higher highs, higher lows, higher highs, takes it out, full range, boom, 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 boom. Now, obviously, you would not have known that this was in the premium because that's based on this high, right? But how would you have known? Show you. Bang, right? So you come up here, you get into premium, boom, you sell off to the equilibrium, right? You get up here to equilibrium, boom, boom, you sell off down to discount section. And then boom, takes you all the way back up to premium. Bang, 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 bang. This is the middle that we're talking about, right? This is the middle that John be talking about. Don't fiddle in the middle. That's it. So yeah, I mean, that's what I'm seeing on Toshi right now. I would say be holding your long until at least 0.900091. That'd be like a 50% profit for you almost. Probably call it 33%, something like that. Yeah, I mean, that's what I'm seeing. WLFI. Damn. Wrecked. Wrecked. Dude. I mean, this is nasty. Let's look at it. I mean, we don't even have to do that. We can be generous. Let's be generous with WLFI. Let's be generous. Whatever. Sweet. You know how it is when you're trading something? Yeah. No, it seems like you have a very similar strategy and understanding of the markets as I do, Paul. It's actually nice to see somebody like that on the streams, and I appreciate you being like vocal too, man. That means a lot because a lot of people, they just spectate, man, and you seem to be in the trenches taking action. I mean, yeah, as it sits right now, WLFI is absolutely 100% wrecked. But the one good thing is that you are in your extreme discount section, right? Maybe not extreme discount, right? That would be like down here. But you're definitely in your discount section, and you can start thinking about targeting, the 0.618 eventually, right? Now, if you want to understand what I'm talking about, all I have to do is do this. Okay, so this is discount. This is premium, right? And I can switch this and I can make this like how it's supposed to be. Where's the white? Save it. Okay, So the reason why I had it as in red up here is because red usually indicates sell, green and usually indicates buy, right? This is your buy section down here. This is your sell section up here. Now, if you were to do it oppositely, right, where you are, and that's why I think the blue is better sometimes, because if you're doing it opposite and you're, what the hell did I just do? Say that you're doing it like this, right? Then this would actually be sell and this would be buy, but this would be the 0, right? And then this would be, or this would be the 0 up here. And this is the 1.0. So it's like, it's the same, but it's different because whenever you look at fibs, and I can actually show this to you if you'd like, just really quick, we'll do it. 0, right? From point A to point B, this is your 0 line, right? This is your 1.0, which is your full retrace, right? But look how it's different when you measure it from bottom to top. It's 0, right? Because this is your 0.0. This is your last level. And this would be your full retrace down here, which is your 1.0, meaning you fully retraced 100% of this move upwards. Okay. So that's just something really quick for you. So in any case, you really just got to get above this 15-cent level for WLFI to start thinking about turning around, because you've rejected off of it, you've rejected off of it, you've rejected off of it. Do you get another subsequent rejection? I don't know. We'll see. But this is where you can start thinking about longing, at least up here to 23 cents, right? So 15 to 23. I mean, that's a pretty decent move up. That's like a 50% move. Yeah. 54% move. I'd say that's worth the risk to reward on a move like that. That's a pretty sizable move that I don't think a lot of people would be super mad about, right? Having a move up like that. Okay, so we'll see what happens, but yeah. 1 second. See what's happening with Bitcoin. Where's VWAP? We want to go down to the 30-minute. Yeah, we've deviated a little bit outside of VWAP. Let's go to the 1 minute. Yeah, it could be coming back. I mean, it came up and double top rejected here. Right? Bang, bang, bang. Pivot point. Nice little pivot point. Previous highs, right? Pretty simple. Nothing crazy to see, but we'll see what happens. I mean, you got to break down. As it sits right now, you're legging up, right? You're taking out the previous highs, right? You're legging up. Leg, 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 leg. Whoops. Leg, 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 leg. If you get a bounce here, could be cracking this level again, right? But, you know, 115.4, I mean, we'll see what happens. We'll see what happens. There's no guarantee that you keep going up, right? But see if there's any order blocks or anything over here. Yeah, you're reaching an order block right now. There's an order block there, and then obviously there's an order block here. So we can extend those over. Zoom it out a little bit. Order block. Did we get a rejection at this order block? No, we did not. We actually got a confirmation just outside of it. So, yeah, and then you've got your order block up here as well. It's kind of your last ditch effort right here. You're going to break down. $15.7. 15.7. I mean, this is the 1 minute chart, right? So like take that with a grain of salt. Obviously, you've got you got an order block up here too. Maybe this is your last ditch effort, potentially. If you don't know what an order block is and how to use it, get into the blueprint and the foundation trainings that I have on the Drew Wolfer website. And if you don't want to pay for them, great, whatever. Get into the private VIP trading room. Did I get that or not? Yeah. Okay. Private VIP trading room is literally in the first link in the description, I believe. Yeah, let's see what happens here. I mean, we can just watch this live. You know what I'm saying? Let's watch this live and see what happens. But, you know, what we're looking at in order to have a move downwards is to get back under VWAP and then take out these prior lows, okay, which is right at our breakdown point that we were talking about 107, or sorry, 114.750 to 114.8. Now, if you get another bounce of VWAP, that could be what we call the VWAP pop. I stole that from John. He can get mad about it if he wants, but that's called the VWAP pop, where a lot of times you'll come down here, bounce from the VWAP, and then you'll pop up real big, right? Like real nasty. I kind of, let me see if I can find one where I show it to you. VWAP pop right there, right? It's just to the downside, right? Rejection, bang, deviation way downwards, right? That's all the VWAP pop is, right? You tested the VWAP here, bang, VWAP pop, boom, right? Tested the VWAP here after you regained it, VWAP pop, boom, right? Kind of see where I'm going with it. Look at this VWAP pop. Good golly. Good God, man. Yeah, I mean, I don't really like the Asian markets. VWAP, yeah. VWAP. I don't really like the Asian markets sometimes. This is what happens in the Asian markets. Sometimes that's what happens in the Asian markets. Towards the end of them. So yeah, we'll see what happens, man. But in any case, you guys have the levels. You have the understanding of what's going on in the markets right now. If you enjoy this, smash the like button for me, man. That's all I really ask of people. There's two things I ask of people. Just support, right? Support, support, support. And what does that support look like? It's very simple. Hit the like button, like the, you know, if you're on Twitter, like the post, you know, share the post, maybe comment on it if you want. Just follow me, right? Click the follow button. If you're on YouTube, hit subscribe. Boom, baby. Bang on the notification bell. And if you really want to support and you actually want to make money while you're supporting, get into the VIP trading room. It's the first link in the description. I appreciate you all so much. I will see you tomorrow on the stream. Peace.